Hi.
How are you?
Good.
I'm good as well.
Ready for the intro?
I am.
Let's do this. Welcome back. Mike.Bott here with Mortgage Better with Mike.Bott. And I have special guest Chelsea today. And I've tasked her with asking me questions as, well, kind of define your current or to-be former title here at Summit Funding, because you don't deal with anything in the loans, right?
No, I don't know a single thing about loans. I've been the executive assistant to the regional manager, both of them, for the past a little over a year and a half. Nice. So I work directly with everyone who touches loans, but I don't know anything about them.
So you don't know a thing about loan. Do you know what DITI is?
A what?
DTI? Conventional?
No.
FHA?
I could do a little fa la la la.
See, there you go. So what I've tasked her is with any questions that she can come up with to ask me, a seasoned loan officer, again, in the business for about 6 years, and it'll just be a kind of fun ask me anything.
Yeah, so I'm just basically going to ask you all the same things that I would ask if I was buying a house in this market. Fantastic. Or any of the fun things. Okay.
Awesome.
So I'm just going to throw out some things that I've kind of heard a lot about.
Don't throw them hard, please.
Okay. Well, I'll do a gentle toss then. Hopefully you can catch them. So one big question that I have is, what exactly is the normal setup for, like, hey, I'm ready to buy a house. Where do I start?
The first thing that you're going to start with is getting pre-approved, because without that pre-approval, you're not going to know what your monthly payment is, what you qualify for, or if you can even be pre-approved, because that's one of the main things is, hey, I can go out and just buy a home. Well, not exactly. If you have a bunch of cash lying around, absolutely you can, but getting pre-approved.
I don't.
Me neither.
we got to work on that.
Yes. Well, that's why we're here every day, right?
Exactly.
So getting pre-approved is obviously going to be the best and first step, so you know what to work on, what your price range will be, and those monthly payments, because you're going to be making those payments, right?
Right, and I need to know, like, how severe this is going to impact me, or if it's not really a big change at all.
Well, it's a housing cost, so usually it's pretty significant.
Okay.
What else you got?
I would like to know, after I get that pre-approval, how do I make sure that I have, like, somebody who's in my corner when I'm trying to find a house? Because I don't want just, like, the same house that, you know, you already took 4 other people to look at, and then there's really not a chance for me. I want to make sure that the house that I'm buying and I'm living in is perfect for what I need for my family. How do I do
have a little bit of say in that, because I tell you what type of property to buy.
Right.
Or you know, versus condos, single-family residence,
right.
If you want acreage, you know, I kind of work that into some of the figures of the loan, but in reality, that's going to go directly on your real estate agent. If you have somebody you're connected to who's already in the real estate line of work, fantastic. Talk to them. Talk to a bunch of them. I usually recommend that.
Okay.
But if you don't have anybody, I work with several certified real estate agents who can help you with that process.
Well, that's really good, because I don't know anyone. So I'm gonna go kind of based off of who you know and what you think would work best for my situation, and we can go from there.
But my name is Mike, not anyone. So.
Okay. Mike.Bott here at Summit Funding. I just wanted to know also, you know, okay, cool. I gave you everything that you need. I got it all done. It's all looking beautiful. We got a pre-approval. I want to put my offer in.
Wait a minute. You think that having to pay a 30-year mortgage with monthly payments is beautiful? Let's be real. I'm putting you in debt. And
it's scary. Let's be honest. It's scary.
It's scary.
Right? That does make sense. It is pretty scary. But in the grand scheme of things, what are my other options?
Yeah.
None that look as good.
You can pay rent.
No,
where
thanks.
A landlord can sell the home. Your rent's going to be raised at some point. Not a guarantee, but at some point it will be raised.
Right.
You know.
And there's no significant security in that. With you know, you're paying someone else's mortgage with that, right? You know, that's not my house. If I want to renovate something, I have to most likely check with them, right?
Well, and most landlords aren't going to just give you a brand new kitchen. Oh, here you go.
Yeah, that's not.
You usually got to burn it down first.
Yeah. Not what's recommended. We are not recommending that.
No, because then you won't have a place to live, and he may not rent back to you. So.
Right, or what if it's not covered? You know, that's another thing. You don't know what's covered.
You just don't.
Right, that makes sense. Okay, so if I'm going through the whole steps, and I get my pre-approval, and I find the perfect house, my offer gets accepted. This is all fairy tale land. This is all dreams coming true, right?
It happens.
It looks great.
It does.
How do I know what bills come with my house other than just my mortgage? Because my mortgage isn't just paying for the house, right? There's got to be other stuff.
Well, for the majority of your payments is going towards your insurance, your homeowner's insurance. So let's say
I did not put like any money down. Like they said, here you go, have fun. So
in that scenario, you would have to pay for home insurance. If you're getting a loan, homeowner's insurance is required.
Okay.
And that protects the home, perils, and liability. So that's usually included in most mortgages, and property taxes, and then your loan payback. That's it.
Wow. Okay.
So you got your utilities, so Comcast, Xfinity, PG&E utilities, gas, electric, that sort of thing.
Right.
All those would be on addition, paid separately, as well as HOAs.
With home costs, but not associated with the mortgage, right?
Exactly.
Okay.
Not associated, except for HOAs. If it's a housing cost associated to that property, like a homeowners association bill would be, then yes, we have to take that into consideration.
And I should find out if I'm going to have an HOA before I make a final decision on a house, since it has a cost, right?
It's advisable.
Okay.
Because hey, if you're in a neighborhood and that HOA is $100 a quarter, which we see sometimes often,
right?
It's not a big deal. But if it's $300 a month, that's pretty significant, right?
Just a bit.
Yeah, your real estate agent is going to be the number one, what's that word I'm looking for? Person to kind of vet those options as you view those homes. Say, hey, there is an HOA here, but here's the cost monthly.
So that's my resource to go to.
Absolutely.
Okay, perfect. Okay, so then I have everything I'm looking for. My house is ready to go. And then how long do you think it's going to take after I get you everything and my offer gets accepted?
All right. So once the offer is accepted, we have a defined amount of days. Usually it's 25 to 30 days in our current market. I want everything in 24 hours.
Same. I'm the same way. If I want it right now.
You're going to get your keys in like 30 days, but I need everything in 24 hours because once we get the contract accepted, even though you're pre-approved, I've just looked over your information, made sure that your income is correct to the calculations of the loan program that you're looking at. Mm-hmm. And then what we have to do is give it to a physical underwriter. So they take a look at everything. They dot all the I's. They cross the T's. They make sure that my calculations are correct. And usually there's a little bit of back and forth.
Right.
If everything goes smooth, we can have that response back less than 17 days.
Okay, cool. So they kind of make there are quality assurance part of it to make sure it's all good to go.
Quality assurance is part of it. The other part is scrutinize. They're going to scrutinize your loan file to make sure you meet all the guidelines so that when us as the lender close that loan, it's a good, valid loan. They are also looking for fraudulent things like that.
Right.
So, all that money that you spent on Etsy and tried to put on your self-employed business.
Listen, okay, it was totally worth it. Those bracelets were to die for, but not at the expense of me losing the loan. So I get that.
Exactly.
That makes sense. Okay.
So yeah, they're just they just want to make sure everything is good. So when you do close, we've done our job.
Okay, so we got the bumpy road, possibly,
Could be.
while they're going through everything, just to make sure that the next 30 years of me having this loan, there are no issues. I don't have to worry about a hard knock on the door later on.
Well, and they can't guarantee that because life happens.
Right.
We've had several escrows where, let's say, somebody's going along good and they change jobs and they don't tell us.
Oh.
Or they quit their job early.
Oh.
So my advice throughout every escrow is to not do anything. Don't charge on credit cards. Don't buy a car. Don't spend any money that you have to or make any drastic changes until your keys are in your hand.
And I like the keys in my hand, so I'm going to make sure I do that.
Exactly.
Quick question.
Uh-oh.
It's not a hard one, so it's another toss-up with a gentle catch. What exactly is an escrow account? Because I've seen so many people talk about them, right? And it means nothing to me. I don't know what that means. But if it's an account, I'm assuming it has monies.
Yeah, so an escrow account or impound account, as we call it here in California.
Okay.
That account is basically look at it as a savings.
Okay.
As you make your monthly payment, if you want to pay your homeowner's insurance and your property taxes.
Oh, that's a good one, property taxes.
Exactly. If you want to pay that as part of your monthly payment, what we do at the lender is we start a savings account for those payments. Property taxes in California are paid, or at least San Joaquin County are paid twice a year.
Okay.
And then homeowner's insurance is paid once a year. So what we do is we take some money from you at the close to put into that account.
Okay.
And then every month you're making a portion of that payment. So let's say your homeowner's insurance is $1,000 a year. You're putting in $83 a month into that savings account. So when that bill comes due, we pull it from that account and we make that payment on your behalf.
Okay, so that means that I don't have to worry about it because that would be really stressful if I think everything's going good and then all of a sudden the property taxes, I don't know if you guys have seen property tax bills, but I've seen them when they're coming through. There's usually a comma. I don't usually have a comma of extra money just laying around. So that's really good information to know.
It's a great way, and we set it up for you just so that doesn't happen. If you know what your payment is and you don't have this big, huge bill 3 times a year, 2 times on property, 1 time on homeowners, then that can make life a little bit more simpler, which we can all get around.
Yeah,
right?
I could really benefit from that myself. That's just me. Mm-hmm. Okay, well, I think for the most part, I kind of get a good grasp. Do you guys get it? I get it. He did a really good job of making it make sense.
I try.
All right, so I know that when I'm ready to buy my home or my next home or my cousin's home or anyone else, I'm going to Mike.Bott at Summit Funding.
Thank you so much, Chelsea. I appreciate it. Be sure to check out the rest of my media, Mortgage Better with Mike.Bott. Have a great day.
Bye.